Right. Morning, everyone. Welcome back to our morning cuppa at AM. Joseph here. So, looking at the Hong Kong market, right? One thing I just want to comment is the momentum is very strong right now. So, yesterday the Hang Seng, the benchmark index for the Hong Kong exchange, have breached this 28,000 point level. Right now, heading steadily towards 28,600, and followed by a 100 point level. You can see yesterday, right? The the uh, market cap was quite flat, but money flow is actually going into the insurance company like Ping An, China Life, right? And even I noticed that the fund stocks actually look into the bank, right? The 1398, 939, right? This shows that the consolidation for the bank have comes to a completion. I can see that for the past, I think, a few months, right, the bank stock has been moving sideways. But as of yesterday, right, the bank, this China Construction Bank, CCB, right, almost reached 820, their resistance level. Apart from the banks, right, as we have mentioned past a few weeks, gold prices, the gold related stocks also actually went up, right? And so we have the gold, banks, insurance company, and yesterday, right, I do see that the property counters also actually went up, such as like Henderson, the New World, both are actually moving higher high, and the GLC property, the overseas land, right, also actually went up as well. So this shows that the Hong Kong market, right, after the for the last 1 week, right, I can see that the momentum and the sentiment have really changed, increased tremendously in the Hong Kong market. In fact, for the last 2 days, I start to get call from fund managers to look at the Hong Kong market again. So while we are looking at some of the uh, foreign market, right, do pay attention to the Hong Kong market, and these are some of the stocks that I have right now here, which I think we can actually look at it and trade accordingly, right? But once the market starts actually runs, but prefer to the big cap, especially the index-linked stocks or the Hang Seng tax related counters. Hong Kong have another one more index, which is the it's called Hang Seng China Index. So you can actually look at the Hang Seng China Index, which are the component stocks and those stocks that which have their operations in China. Okay, and as of the US market, initially experienced a very strong selling pressure, but towards the end, it made a very strong rebound, right? It shows that the US market bulls are still in control as well. So yesterday, what happened is that the commodity market have a very big swing. I think for the last 3 to 4 days, right? You can see that the oil price actually went up. Not only the oil price, not only the gold price, oil price, silver price, and even the copper price also actually shoot up. So quite a few number of clients, dealers reminded us what are the stock that we can actually look at on the copper, right? I think one of the easy counters in the US, right? If you're looking for gold, it will be the NEM, right? NEM, right? The next one for the copper, right? I'll be looking at FCX, right? Freeport McMoran. This counter has been in our trading stocks for numerous time, right? In our this Monday and Wednesday trading stock reports. And you can see that this FCX has been climbing up from about 42 US dollar right now to about 65 US dollar. So yesterday, you actually have a strong gap up, but that was a profit taking, and then it closed with a red candlestick. But this is understand, right? As you can see, the stock have rallied so much that there will be some selling potential. But based on the volume profile, right, you can see that the support level is at 60 US dollar at this level, right? At this juncture, right, what the world is actually worrying is that gold, silver may not have economic. I mean, silver have more, but what happened for the last 2 days is that the oil price actually went up. So once the oil price actually went up, You can see that across the commodity, right, the hard commodity, the precious metal, even lately we saw the soft commodities also actually start to actually moving up as well. Okay, so I think for the next this month and next month, right, commodity prices is something that we will be actually following closely. So look at the S&P 500 overnight performance. Most of the stock are holding up quite steady. But one counter have actually caught my attention is actually the you can see that over here, the RCL, they pop up by 18%, right? So you look at RCL, basically there is a cruise liner, very famous company called Royal Caribbean, right? If you like to actually go on cruise, this is the world largest famous cruise called RCL, Royal Caribbean Cruise, and they have reported above expectations results. And during the guidance, they actually give a much optimistic outlook, right? And the stock have actually extend their movement during the off market, right? So you can see that the after the consolidations, right, the stock actually have gap up, and right now this is the what we do see the outcome here. But what I want to pay attract or seek your attention is that in this volume profile, now you can see that before we have a pop up here, right, before the result day, the stock actually climbed above this red color line, which is the they call it the POC line, right? This is where the bull and bear change their power, right? So once you cross this red color line, right, the bull will have a stronger strength than the bears, right? So this is the signal that I always want to share with you and look at your trading, right? So I just want to pick a few counters that also related to travel and leisure, in the US, Expedia, right now is above this volume profile, right? The earnings is going to be next week, right? So in this 1 or 2 days, you still have time to look at the level to trade on Expedia. Another count in the peers, which be the Airbnb, right? Also trade above the volume profile of support level or resistance level right now here. Okay, and earnings is also somewhere next week as well. So you can see the effect just before the earnings comes up. So these are the few counters that I want to share with you from the US. And for the Malaysia market, right, FKLI continue to have mild corrections for the second day, right? But so far it still stand above their psychological level of 1,007. So we're not too worried about that. I think this is actually a normal pullback as our peers, US and Hong Kong, continue to show a positive sentiment so far. Right, as for FCPO, you can see that we have actually switched, right, to playing the long, right, once they break above 4,002, and you can see that once they break this important threshold level, the momentum just continue and follow through. So trend trading does play a very important strategy, right? Especially you see right now here, the FCPO climb above the 200 days moving average. So technically, it has turned stronger right now, and so far, there's no sign of slow down yet. So FCPO is eyeing about 4,004 and 4,005 expansion, right? For the last few days, oil price have actually went up. That have actually lifted the sentiment across on most of the commodities in the world, right? And as for our counters yesterday, right? ISF continued to show positive price actions, and sentiment remains positive on the capital A as of yesterday. Now, for trading stock this morning, firstly, we'll be looking at Powerwell. They break above 70 cent limit and heading towards 75 and followed by 80 cent. Other support is 55. Then on we have LB Aluminium riding on the aluminium story. Break from 53 cent and now heading towards 56 and followed by 59. Now the support is 50 cent. So we have two breakouts this morning, Powerwell Holdings and followed by Aluminium. So I'll stop here and pass on to Alex on the strategy report. Thank you.
Okay, morning everyone. Welcome to RHB's Morning Kappa 8. Okay, just to follow up on how well markets have performed in 2026 so far. We're just issuing a bit of an update. The core view on markets haven't changed. If you have managed to look at our December report, which is the 2026 market outlook, published it in mid-December before the holidays. So essentially, we have been highlighting the fact that 2026 was going to be a trading market, and a lot of the added liquidity will support equities as would the stronger ringgit, which has been a tailwind for markets. And I think in terms of foreign portfolio flows, while we have seen 6+ consecutive months of outflows in 2025, I think we will end January 2026 with positive inflows to the tune of about $250 million US, about 1 billion ringgit plus minus. All that money is clearly finding its way into the big caps. And I think you'll find that the key reason for the CI jumping much more strongly ahead of market expectations in the month of January is the fact that financials have done really well. All the banks have moved higher. But I think you'll be surprised to find that the best performing stock component stock in the IPM KLCI is in fact Mr. DIY, the perennial consumer laggard, as it played catch up. It was up about 22% in the month of January up to our cutoff date. So really, Malaysia's domestic fundamentals, it stands our country out from amongst regional peers. We've got political stability, ongoing reform initiatives, and a lot of and the robust growth numbers. I think for the fourth quarter, I think you've seen the advanced 4Q GDP numbers that suggest that 2025 growth will outstrip what has been projected by Ministry of Finance and closer in line with RHB economic forecasts, which have been ahead of the street. Okay, so we do recognize that we now have easy liquidity conditions, and we think any kind of market corrections that we've seen in the last couple of days will be relatively shallow. I think the FOMO effect is going to kick in, and lots of investors, both retail and institutional, are looking for buy ideas, and they have been caught short. So I think any kind of ongoing pullback will be an opportunity to start looking at some of to rebuild some of the portfolio. So but of course we are on the cusp of the December quarter reporting. And I think for the most part, when you take a step back and you look at the macro conditions that prevailed in the fourth quarter of 2025, there's the things that happen. We are relatively encouraged that the December quarter reporting season ought to be at least in line with our expectations for the most part. And I think the December 2025 earnings growth will remain in positive territory. Our forecast is for weighted earnings growth around the 2.5% kind of range. Potential disappointments possibly could stem from the oil and gas sector. given that we've seen relatively soft crude prices through fourth quarter of 2025, and the perennial earnings disappointment once could potentially come from low petrochemical product prices. So watch out for PChem results. Also, I think perhaps risk could come from some of the telcos, mobile telcos, given the M&A related financial adjustments, as well as the stronger ringgit impacting the translation of foreign overseas earnings back into ringgit. So so these two sectors, but I think for the most part, the banks, consumer, basic materials, plantations, and all that, it should be pretty solid from a earnings perspective. Okay, so I think all of what I'm saying is very much in line with our house view on the outlook for 2026. I'm not saying anything that we haven't already said in our December report, but I think in order to reflect the stronger than expected liquidity surge, we are upping our year-end target to 1780, from 1720. And this comes from moving our target PE from 15 times, which was the historical mean, up to about 15 and a half times, which is about half a standard deviation above that number, above the mean. So so I think in terms of sectors that were overweight, banks, energy, consumer, property, healthcare, basic materials, construction, rates, and technology. I think just to take a step back, I was just listening to Joseph's presentation just before I came on, and he was talking about the fact that copper has surged, and I think closer to home, the proxy to this copper surge, I think we can look at precious metal, because aluminum prices are very closely correlated to copper. I think the correlation coefficient is 0.75 positive. And I think the fundamentals for precious metal certainly robust. We're seeing, number one, widening jaws between alumina, which is the raw material, and aluminium, which is the end product. And that will mean wider margins. And obviously, we are also seeing China producers reaching their annual production cap, and also the fact that year on year, global aluminum inventories are down 20% year on year. So for sure, we are expecting potential upside trends for aluminum prices going forward. So so take a look at precious metal. I think it's a very compelling buy recommendation there. Okay, so so I think we are positive on we remain constructive on equities going forward. We think any kind of pullback in the market is a time to reassess the entry points for our favorite stocks. But I think being a trading market, investors will need to be pretty nimble. You need to ensure maximum financial discipline. Don't get carried away. Take profit when you be disciplined to close out positions when target prices are attained. And to ensure that we continue to retain a fair amount of defensive sectors in our stock portfolio, given that a lot of it's not all going to be sunshine and roses all the way. Markets don't go up in a straight line. And there are very many overriding risks, which are very much Trump inspired, external macroeconomic risks that are out there. We've talked about it in our 2026 strategy report. US financial market pullback, US real economy undershooting expectations, the Supreme Court decision on tariffs, the shutdown of the US government that could come as soon as next week if they don't sign the appropriation bills. And of course, Donald Trump losing control of one or both houses of Congress as we head closer to the midterm elections. And finally, watch what the BOJ is doing with regards their policies, because JGB yields are continuing to move up higher, and right now there is concern that the yen carry trade is going to unwind. So a lot of macro risks out there that we need to pay attention to. But I think, as our title of the report goes, make hay while the sun shines, and continue trading. All right, that's it from me. Let me pass the time to the next presenter. Thanks.
Thanks, Alex. So we have a report on Tenaga. So we have increased our target price for Tenaga by 6% to 16 ringgit and 50 cents. We still gives you about 17% upside as well as a 4% yield. We have adjusted our earnings higher about 6%, basically to account for lower effective tax rate. We understand that Tenaga has basically gotten the green light from the government for them to recognize these tax credits, which will be recognized in the fourth quarter of 2025. So this should bring the effective tax rate for 2025 to about 26%, which is lower than the earlier guidance of 30% by management. I think the street is still expecting about 30% effective tax rate. So we do think that the earnings, once the fourth quarter earnings comes up, it might surprise the market, at least based on the latest guidance from management. Aside from that, Tenaga also has shared that they will be able to achieve the 12 billion ringgit capex target for last year. Given that the majority of that will be the base capex allocation, whereas the contingency capex in terms of utilization has been slow. That's because they were waiting for the finalization of the recovery mechanism. This has already been done, so this means that Tenaga will then accelerate their contingency capex utilization for FY26 and 27. They are still hopeful of achieving your 2/3 target of RP for capex approval, which gives about 7% upside. Apart from that, I think in terms of DC demand continue to remain quite robust. Tenaga is still looking at signing up to 1 gigawatts of new energy supply agreement with data centers from now until 2030. Just recall that they already secured about 7 gigawatts of supply to data centers with about 10% load utilization at the moment. They also expect the announcement of the new Category 2 gas plant tender soon, given that it takes about 3 to 4 years for you to build a plant if you want to start commissioning the gas plant by 2030. So we think that Tenaga stands a good chance to win the bid. If we assume, let's say, a 2.8 gigawatts gas plant and 70% debt funding, we see about 10% upside to our target price. So I think share price for Tenaga has not recovered to the levels we've seen, which about 14 ringgit something when the court ordered them to pay RRB. So we do still think there's still room to accumulate Tenaga shares, given that you still get your 4% yield as well to support for your total returns. So I'll just stop here and I'll pass the time to David.
Thanks, Max. Hi, morning everyone. So we have Bursa results out today. The fourth quarter results met our and consensus estimates, as well as Bursa's own 2025 financial KPIs. Net profit 61 million ringgit for the quarter was down 5% Q-on-Q and also down 12% year-on-year. There was an improvement in operating revenue. For instance, the securities average daily traded value was up to 3 billion from 2.8 billion in the third quarter. Contracts traded also improved during the quarter, but this was offset by seasonally higher OPEX. There were 19 new IPOs in fourth quarter, up from 9 in the third quarter. So the total for 2025 was 60, and this actually met Bursa's target for the year. There was a final dividend per share of 14 cents declared. So this brought the 2025 DPS to 28 cents or a 91% payout, down from FY24, where if you recall, they had 36 cents ordinary plus an 8 cents special last in 2024. So the payout then was much higher, 136%. Now for 2026, they are looking at the headline KPIs. They are not guiding for PBT range anymore. Now a ROE range, 27 to 30%. In 2025, it was 30%. They are looking at non-trading revenue growth of more than 10%, while its non-financial KPIs is looking at total IPO market cap of 28 billion ringgit this year. It also guided for OPEX growth of 5 to 8% and a dividend payout of 90%. So post the results, we have just made some minor fine-tuning to our FY26 and 27 net profit projections, mainly on the securities average daily trading value assumptions. However, the bigger change was made to our target PE as well as target price. We are actually quite positive on the liquidity inflow trends we have seen thus far. And hence, we have upped our target PE to 27 times from 22.5 times. This 27 times is at +1 SD from the mean. So as a result, we have revised up our target price to 9 ringgit 95 cents from 8 ringgit 10 cents. And we are upgrading the stock to buy from a neutral call. Okay, that's all for today. Thank you for joining us. Happy trading. Have a good long weekend, and we will see you again on Tuesday, 8 a.m. in the RHB Morning Kappa at 8. Thank you.